Welcome to Subramani. This is the second video or this is all on the Russia-Ukraine war that I'm talking about. First of all, let me tell you that I am an advocate of long-term investing. I have 30-year, 40-year kind of holding periods. To me, the day-to-day happenings in the market is not exciting at all. This does not mean that I will let go of trading opportunities. So if I get a trading opportunities, I will take the trading opportunity. So what happens with the war situation in Russia-Ukraine is very simple. It will definitely lead to energy based inflation. Russia is a very important market for oil and gas. There is no doubt about that. 20% of Europe's requirement or 22% of Europe's requirement is met by Russia, and we have no clue what will happen if Russian oil is cut off from the market, which means we are not worried so much about the war, but the United Nations and the United States deciding that sanctions have to be imposed against Russia, removal of Russian banks from SWIFT, not being able to access markets for oil and for gas would all have a definite implication on the Russian economy and on the inflation in the world. Russian markets are not too big. They're about 3% of the Morningstar index, not very significant, but you see the prices of the oil companies in Russia, they have dropped dramatically to a PE of 2 or 3 and dividend yields of 30-40%. I'm sure that the dividends may disappear at least for a couple of quarters. So we don't know what is the further implications of that. But yes, if you have assets in the Russian market, it is time to feel the heat, and you may be already feeling the heat in terms of fall in NAV. However, I don't think many viewers here are too much worried about their investments in Russia. Even if they do have some exposure to Russia, it will be through a global fund, and in that global fund Russia would be 2-3%. So really not too much of a thing. But yes, overall, if the markets come down, the impact of the Russian markets coming down so fast will be felt. But this may be a great time for the fund manager to decide to buy in Russia rather than worry and panic in Russia. So we don't know. I'm not getting into that area. That's not my area at all. So energy prices will be up. Therefore, any company, any industry which is using a lot of energy could be in trouble. We do not even know how the Chinese are going to react to it, whether they will be producing more, whether they will be producing less, we don't know. So metal prices have taken metal prices should have taken a hit, but the metal shares are actually up. Gas prices are likely to be revised in India from 31st of March, which is not very far away. So you could be bullish on Coal India, GAIL, but it's not great news for the oil marketing companies, though there's a chance that the government will reduce the excise duty. These are the implications as far as the market is concerned. Yes, your concern should be, the primary focus should be on energy, but there is not much that you can do. Whole of Europe will feel the impact of energy. We do not know whether US is able to get more LNG into Europe. Doesn't look very possible. Does not even look like Saudi Arabia is going to say we will fill in the void. So the impact will be there. What will India use its rupee trade reserves and import oil against that? Russia could be keen to do that because Russia has got a lot of rupees. Will they want more rupees? We don't know. We don't know any of these things, right? So difficult to say, but largely by not doing anything, you won't hurt yourself too badly. If you want to, then you should be moving in these areas where energy intensive companies like cement, and internationally we are going to see some movement of coal also, because the implication of China using more coal. Then there is also the fear that China might use this opportunity to try flex its muscles in Taiwan. Will the US or NATO or somebody speak to China in such a way that this is a deterrent? We don't know. So that could be the other implication. We don't know how gold is going to react. It has not reacted much. In a war-like situation, gold prices should go up. Gold prices have not gone up much. Metal prices like steel have gone up. You could use this as an opportunity to sell and then buy it back, right? So think of all this, but not taking any action is not such a bad option after all. So that's true. Thank you.